Equities are also commonly referred to as shares or stocks. The increase in DIY investing and simplified access to markets through apps on your mobile devices has led to a huge increase in equities investing in recent years. But what are equities? Let's find out. Equities are issued by publicly traded companies. When you purchase equities, you are purchasing a stake in the company. How large a stake depends on how many equities you purchase and how many are outstanding. When you purchase equities, you may be entitled to vote at shareholder meetings on things like the election of company directors and on certain corporate decisions. Equities may also entitle you to any company profits that are allocated to shareholders. These profits are known as dividends. When you invest in equities, you make money by selling your shares at a higher value you paid for them, by making a capital gain, or by receiving dividends from the company. Let's look at both a little closer, starting with capital gains. Let's say you've bought equities in a company for $5 per share. You decide to purchase 100 shares for a total of $500. A few years later, the company has been successful and the share price has risen to $15 per share. If you choose to sell your 100 shares now, you'd receive $1,500, making a capital gain of $1,000. However, capital gains are not guaranteed. When you purchase equities, the share price can just as easily go down, and you may be forced to sell your shares for less than you paid for them, taking a capital loss. Now let's look at dividends. As we said before, dividends are the allocation of company profits to shareholders. Not all public companies pay dividends. There are no rules that a company has to pay dividends, and a company that is paying dividends can increase or reduce their dividend payments or cease them altogether if the profitability of the company changes. Here's an example of how dividends can work. Let's say I own 100 shares in a company that has decided to pay dividends to their shareholders. The company announces a dividend price of 5.5 cents per share. That means I'll receive 5.5 cents for each share I own. Most companies pay dividends on a quarterly basis, 4 times a year. When a company declares the dividend prices for the next quarter, they also announce an ex-dividend date. Anyone who purchases and holds shares prior to the ex-dividend date will receive next quarter's dividend payment for their shares. And that's some of the basics on equities. To learn more about equities and other basic investing topics, visit our website and follow us on our social media channels to learn more about basic investing.